This IPO is getting a lot of attention due to its RDSO approval and 45 crore order book. But is it genuine? Will it have listing gains? So watch the video till the end to find out. Defrail Technologies Limited. It's a SME IPO, full-fledged issue. It's going to get listed in BSE platform. Issue period 9 to 13th, listing on 16th. It is clashing with PCCL IPO. It's a small size IPO, 13.77 crore. Objectives of the issue: capital expenditure around 7.96 crores, solar power installation around 1.73 crores, and remaining for corporate purposes. Let's look a brief about the company Defrail Technologies Limited. Founded in 2023, a manufacturer of rubber parts and components. It basically works in automotive, railways, and defense sectors. Focus is mainly B2B and B2G, and they have manufacturing facilities in Faridabad, Haryana. They are ISO certified and also registered in government market place GEM. It's not a new company. In fact, it was 1980. Vikas Rubber was established in 2008. Impex High Tech Rubber was established. With business transfer agreements, both got merged into Defrail Technologies Limited in 2024. So it's a old company. As I said, they are basically work on three segments: automotive, railways, and defense. Automotive, 80% of the revenue comes from automotive. Okay, and they basically have rubber hoses, assemblies, sealing components for fluid transfers, air intakes, etc. Railways, the main talking point is RDSO approval. RDSO stands for Research, Design and Standard Organization, which is from Indian Railways, which has a very high level entry barrier. These standards are required for like technologies like Kavach and other things. They are approved vendor for air brake hose coupling, brake pipe and feed pipe, and supplies to Indian Railways and approved Indian Railway vendors. Defense sectors also, they have very small presence where they do customized rubber components for defense vehicles. So 80% of the revenue comes from automotive and 20% from revenue railways and defense. Financial snapshot. We cannot take the FY23 data because the company itself got merged in FY24. So FY24 the revenue was 0.72 crores. It was the year where consolidation happened, so not much revenue was seen. FY25, 62.22 crores is the revenue, and as of September 25, 39.08. PAT also in FY24 was 0.11. FY25 it's 3.42, it jumped. Again in September 2025 it's 1.51. If you take the entire year, it will almost come to FY25 around 3.5 itself, assuming. What were the reasons for improvement of PAT? They had better inventory management, better procurement discounts, and supplier discounts. They had one-time tax credit of 30 lakhs from earlier periods. So these were the reasons for PAT increase. Some of them might happen in the future, may not happen in the future also. As of now, looks fine. It's growing well. See, one of the main key strengths is they have well-established manufacturing base. They have this regulatory approvals and government approved. Their RDSO approved government vendor, and they are registered in GEM website, which has government contracts. They have an order book visibility of, please read it as 45 crores. Of 45 crores order book they have, they are ISO certified, and their founders are still invested and they are working with the company, so they have a long 45 years experience in the industry, so they have a good name. So these are the key strengths. In terms of the risk, right, see, 80%, 84% of the revenue comes from a single customer, Imperial Auto. Okay, the automobile sector, anything if happens to this company, there will be a major problem. Second, as I said, no dependency is heavily on automotive sector, though there is a talk about RDSO approval and all those things, but 80% of the revenue comes from automotive. Railways and defense are currently 20% itself. And whatever facilities they have, they are lease facilities. So any changes in the contract might get affected also. Other key thing is the lead manager, Next Gen Financial Services, this is their first IPO. That is one of the, we don't know how they will perform and other things. Does not give confidence. Second thing is the anchor book is average. There is no major institutional name. There are only 3 names in it. They are average anchors. So before final verdict, please like, share and subscribe the channel. Positives, these are This company is an established rubber component manufacturer with presence in automotive, railway, and defense. They have 45 crore order book with approval of RDSO and GEM, which is positive. And also, one other thing I had not mentioned here in the slide is their P post IPO is around 17x, which is good when compared to peers, which trades bit higher compared to this company. But the risk what we see is higher customer concentration. 84% of the revenue comes from single customer, Imperial Auto, which is a single point of failure. Small size average anchor book, first IPO of the lead manager. Small scale issue also can cause liquidity problems post listing. There may not be any buyers, and few big players can manipulate these IPOs. So for conservative investors, I think it's better to avoid, because there are not any positive indicators like good anchor book or lead manager. Risk takers can look at HNI and QIP subscriptions at the end of last day and then take a informed call based on the geopolitical situations in the open market also. So thank you everyone.